Can we start with your call for US mid-caps? Just walk us through why you see opportunity despite the balance of risks and the headline risk coming out of the US with the tariffs.
If you look at the mid-cap space, what we are seeing is still with the Trump policy, still pro-growth, mid-cap stocks being also more exposed to the domestic market. So 2/3 of the revenues are made inside the US itself. So that's also where you see a larger concentration also in industrials, in financials, who should benefit more. At the same time, if you look at the valuation, they still trade at more than 20% discount compared to the large caps. And the reason why we don't go to the small caps is also with the higher for longer, still a bit unsure where the rates are going to go. The mid cap is a bit the sweeter spot to be exposed in the theme itself, where it's still risk on pro-growth for the time being.
How concerned are you about meaningfully higher dollar, meaningfully higher yields?
Well, it's something we have to be mindful of. Our base case is not that we see much high yields. Our base case is still also with the Fed going to cut in December, so we still expect that to continue. We took the lift up, we are going to take the stairs down. I think that's also where it's a much gradual, slower pace which we have to go down, but the underlying disinflation trend is still, in our point of view, intact.
How many cuts are you expecting for next year, though?
On the next year side, well, we reduced the cuts by 50 basis points since the Trump election. So also there, we expect maximum 3 cuts by next year.
So 75?
To come in. Exactly.
Wow, interesting. Tom, back to mid-caps, right? I get what you're saying. They're well insulated, more sort of domestic plays, U.S. plays. They're also cheaper, much better valued. And the more important point versus, let's say, small caps is mid-caps, most of them are actually making money. They're profitable. You can't always say the same thing about small caps, right?
That's true as well, and
yes.
Especially if you also look at the leverage, right? So small caps have more leverage on it versus the mid caps. That's why for us we really rotate now more from large caps into mid caps, where we also expect the trend to continue for the months to come.
Thomas, you astutely point out that the equity risk premium in the US is too low. So there's a lot of complacency in these markets, historically expensive, overvalued, some might say. Is a correction coming? And if so, what will be the catalyst? And would that be an opportunity to perhaps pick up selectively some of the names?
We don't see a correction coming yet. That's also why we have an overweight on the US market at the moment, which we also where we use the tool by using mid caps to to get into that call. What's important there to highlight, risk premiums, that's more a topic about the long term, right? So risk premiums are low, they're not at extreme levels yet. So what we are doing now is really reallocate within the sectors. At the same time, also with risk premium low, we are adding also diversifiers such as long-short hedge funds into the portfolios, market-neutral strategies, which are also interesting to add on, especially in a market where you have a low equity premium.